Hi everyone, I'm Prem Raja and welcome to the Currency Blog TV. Last week was a pretty eventful week on the markets, mainly because the Bank of England cut interest rates in the UK from 0.5% down to 0.25% for the first time in around 7 years. In addition to the interest rate cut, the Bank of England also added to their quantitative easing programme, and they added around £60 billion worth. This extra £60 billion worth of quantitative easing will be used to buy government bonds and stimulate growth in the economy. Many people have said that the Bank of England's act of cutting interest rates and adding more money into the economy was a little bit premature. However, the Bank of England Governor Mark Carney has stated that the time for stimulus is now. And in my opinion, we're better off avoiding a recession completely as opposed to waiting for a recession to happen before we actually start taking some action. My main concern here is that the Bank of England has stated that they could cut interest rates even further. So we could be looking at interest rates in around a year's time of 0.1%, 0%, or even worse, a negative interest rate. So why are the Bank of England cutting interest rates? First of all, it makes lending a lot cheaper and it stimulates growth. So for people that have got mortgages right now of around £200,000, this extra rate cut has now made their repayments cheaper by around £26 per month. If you add that up with everybody who's got a mortgage in the country, that does add up to something quite substantial that the people are saving here in the UK. And with that extra money, the Bank of England would hope that you would go out and spend it on something which would stimulate and drive the economy. So now the effects on exchange rates. Well, we saw the pound drop around 1.5% to 2% across the board in most major currencies. We've seen the pound euro down to around 117 now, and it was around 120 just before this interest rate cut happened. Moving forward, we're not expecting the pound to plummet through the ground, so don't get too worried. However, I would be very wary of the fact that the US are still looking to actually do an interest rate hike over the next 12 months. So the pound dollar we could see as low as 125. Now onto the economic data for this week. Now, lucky for you guys, the exchange rates do look to be pretty stable. There's not much happening this week, but I will go over the main points. First of all, on Tuesday, we have the UK industrial production and manufacturing data. Now, for those of you who have been keeping up with what happened with Brexit and with us exiting the EU, the main focus for the UK at the moment is exports. So our manufacturing is a very, very big thing. Now, what we are looking for here is a higher number because now our exchange rate is so low. We would hope that people from Europe, the US, Australia, and New Zealand are buying more from the UK because it's a lot cheaper. On Wednesday at 10 PM, we have the New Zealand rate decision. Now, similarly to the UK, we are expecting a rate cut on Wednesday. Their current interest rate is at 2.25%. We are expecting this down at 2%. However, what I will say is there are never guarantees when it comes to a rate decision. So if you have got transfers to make with the New Zealand dollar, it is worth hedging yourself prior to this decision as opposed to gambling on it. Last of all, on Friday, we have GDP figures coming out of Germany. Now, for those of you who don't know, the German economy makes up for around 40% of the Eurozone. So what that basically means is that if we see good figures out of Germany, we can expect to see good figures out of Europe as a whole. Now, following the Brexit decision, with the UK voting to leave the EU, we have seen the euro take a bit of a hit as well, similar to the pound. So I would say that if you are trading with the pound euro at the moment, Friday's a pretty important day because if we do see good data out of Germany, we would expect the pound euro to drop a little bit. If you have a currency exchange to make over the next week and you're unsure when to do it or you're worried about any of the economic data that I've mentioned, please don't hesitate to contact me directly. I'll be happy to walk through everything with you and ensure that you do get the best exchange rate on the market. I'm Prem Raja, this is the Currency Blog TV.